All right, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts and analysis. So, anyways, let's get into it this week. So, another slight green week here for the markets. We did come a little bit off the highs on Wednesday, as you see there, kind of a gap up in a doji, and I mentioned this kind of on my channel a little bit earlier this week. You know, 1, 2, 3, 4, 5. You know, lots of gap ups here, and kind of signaling a little bit of exhaustion here in the near term. Market's really stretched. We gapped up on Wednesday, and then we gave back some of those gains Thursday, and then Friday closing flat as a penny. You see right there, triple zeros on Friday for options expiration of the month of July. However, the story here of the week a little bit was more in the NASDAQ. You see the triple Qs actually coming more so off the highs, down 1, 2, 3 days. They're actually closed red Wednesday, Thursday, and Friday, and now kind of coming into this short-term trend line. Part of that reason is we did have earnings, so and we have more next week. But Tesla, that took a 10% haircut on Thursday. A little bit of a wedge pattern, rising wedge pattern there on Tesla. That broke through. Also back below this all-time high trend line there as well. So that brought pressure on the markets. Netflix, same thing. Closing below this big green bar here after the gap down on earnings. That probably wants to go to 400, maybe even 375, 380. These companies are reporting, and we're seeing them beat revenues, but they are cutting prices. So that is kind of compressing margins, and I think that's going to be a theme here moving forward. That is one thing that companies tend to do ahead of a recession here. And again, next week we do have some other companies. I believe Microsoft and Google. I don't think we have Apple until the week after. Then of course we also have the FOMC. A 25 basis point hike is baked into the cake right now. So that will be. It's more so about the verbiage, what comes out from them. But in addition to big tech, we do have that rebalancing, right? So NASDAQ over about, I think it's 55% right now in the Magnificent Seven in the NASDAQ. And I think that's going to go down to about, I think it's about 40%. So it's still going to be a huge amount. But we did see some selling. Take a look at kind of the intraday here. Not so much Netflix, but look at Microsoft right towards the end of the day. We had this wackiness there. That is anticipating, the rebalancing there. There's NVIDIA, Apple, Meta, Google. Google not so much there, but these big tech names did have those kind of wacky candles at the end of the day, and a lot of that was kind of market on close, rebalancing, selling. So we did see, again, weakness in big tech. But again, trend is still up right now. I did get a minor sell signal on tech this week. We'll see. It is OPEX related, or it could be very well OPEX related. We'll have to see if that comes into play a little bit more. And if it does start to play out, then we'll talk about it. But right now, market's pulling in. But trend is still up here. We're still above the moving averages. And, if you break this trend line here on the Qs, then you can go down to the 50 and then further, next level down to the 100, which coincides with these trend lines. Another kind of channel or trend line channel we're watching here, and I want to show you this on the weekly because you got a pretty good reversal candle there on the weekly with decent volume. But if you kind of just connect these lows here and we just do this, you can see you've got, a decent little channel. If we connect the highs, so there's your high right there, high, and, still kind of extended there from that 20 moving average on the weekly. So again, looking a little top heavy. It's been top heavy for a while. It's defied gravity, but now what better time to come back in with the rebalancing coming in and earnings coming in, or earnings season kicking into full swing. A lot of these companies that are reporting, the earnings are kind of priced in, right? I mean, when you go from 286 in middle of March to basically 390 in the middle of July, you're kind of pricing in the best here. And so we are seeing, at least for the first names that have reported, the Netflix, the Tesla, Taiwan Semi also reported. We are seeing a little bit of a sell to news. By the way, you can't make this stuff up, but yesterday, CEO of TSM mentioned that there's really not any demand, or not anywhere near the amount of hyped up demand for those chips, mainly coming from NVIDIA. He did say that he sees a lot of growth for those chips, over the next 5-10 years, etc. But nothing that would indicate that NVIDIA's earnings are going to justify a 220 PE at a $1.1 trillion market cap. But that's just the way the market is. We get these hype phases. And, things just get bid up without rhyme or reason. By the way, speaking of hype phase, we may be seeing a little bit of AI fatigue. So take a look at Apple. They did mention their new, let's just call it Apple GPT, on Wednesday. And on Tuesday, Microsoft mentioned that they're going to charge a subscription service for one of their AI tools. And intraday, look at the big, there we go. Look at the big pop intraday. And then that got faded all throughout the rest of the week. Same thing with Apple. They mentioned their little Apple, AI product. Had a huge surge and it faded pretty much the rest of the day and then into the rest of the week. Maybe we're seeing some fatigue here. You need to say a little bit more than just AI for these stocks to start holding gains. It's also very interesting to me that they reported these things a week or so before they report earnings. It's almost like they're trying to cover for, I don't know, maybe their reports aren't as good. You'd think that they would just wait. If you're Microsoft, you're reporting next Wednesday or Tuesday, I believe. Why release this right now? Just a little strange. Why not just wait till your earnings call? So, but either way, we're seeing a little bit of rebalancing here in tech. I still think it's stretched here. If we start to take these levels down, start to take this out, again, there's definitely levels of support that we can watch. On the upside, if we do continue to melt up, again, 390, you got to get through that. But we did close the week below 380. So that was the next level we talked about in the video last week and in previous weeks, and we did close below that. So maybe a little bit of selling finally starting to come into the market. For the SPX, again, same kind of deal, 4,600. We got very close. Didn't quite get there, but again, you got that same kind of trend line there that coincides with the 20 MA. If that gets taken out, then it's down here to the 50 MA with this trend line, and then if you take that out, a bigger move would obviously take you down to the yellow trend line, which is a weekly trend line, and that's, right now, depending on how fast we get down there, it would be, like 4,200 could coincide with those pivots, and so on and so forth. But either way, again, still really stretched from that 20-week moving average. Markets may need to do some more backing and filling. Over to the Russell, I am seeing a little bit of rotation here. And we'll talk about the Dow in a second, but believe it or not, banks getting some love here. Maybe just some short covering going on. We had a lot of bank earnings this week. Goldman and Morgan Stanley not reporting great earnings, but stock rallying anyway. BAC was okay, and then JPM did very well as you'd expect. So banks getting a little bit of rotation. So maybe a trade here coming up where we get kind of banks and we are seeing healthcare rally as well. XLV, J&J reported that had a huge reaction. As you can see, UNH also reporting, getting a big bid. A little bit of rotation to kind of defensive, which is something we talked about recently. A little bit maybe kind of recession play, right? So yield curves, if we can flip over here really quick, we'll show you and I talked about this earlier in the week. But so much for the yield curves. Everybody was talking about, the 3-month and 10-year, it started to normalize. 2s and 10s, it's starting to normalize. That's rolled right back over. So it's almost like the market's kind of looking at this and saying, okay, wait a minute, tech may be a little overvalued here. Let's go into more safety plays, banks, kind of staples, healthcare, that type of thing. But in either case here, IWM, the reason I say that is there's a lot of banks in the IWM, and that's, the KRE makes up a giant portion of the IWM. And, if the KRE is up, it's going to help the Russell be up. So say all that to say this, we take a look at the weekly, we did close above that red bar. So the Russell is showing me a sign of strength here in the near term. You still are into some weekly resistance here around that 195, 196 area, which we did hit. 197.66, the high of the week, we pulled back. But let's see, maybe we'll go up here and test this trend line, maybe a Pierce of 200. We'll watch for that. So the Russell definitely getting a little bit of a bid here as we see some short covering, I think, mainly in those bank stocks. The Dow, 10 days in a row, green, actually, that's the DIA, but the Dow Jones itself, there's 10 days in a row right there. But DIA, either way, again, we talked about that 355 area and a decent breakout right there on the Dow. So you see that trend line, good push, and then now you're into these pivots here. The Dow is leading in, and again, like I was just saying, blue chips leading the market. is it just rotation? Is it just catching up, or is the market looking out and saying, "Wait a second, we should probably own some real stocks here, and not just growth, not just stuff that has earnings 10 years from now, but things that can weather a storm here." So just something to keep an eye on there. But the diamond outperforming here the last 10 days or so. All right, semiconductors here on the weaker side. So there was up 0.5% on Friday, but pretty good sell on Thursday, and it came on volume too. Now it's nothing concrete just yet, but we went up into double top and we pulled back here with some pretty good sell volume there on the weekly, better than average. So something to watch here. We talked about TSM. We do have some more semiconductors reporting soon. But right now we'll have to watch that. No real technical damage. We break these areas, break 150, then we can talk about it. I will say, though, that you do have a pretty big air pocket here. I mean, we gapped up from 129 all the way and closed at 140 on the NVIDIA earnings. There's, if you start to lose these levels, this can go down pretty quickly. Right now, again, no technical damage. But the semiconductors did underperform a little bit, especially towards the latter part of the week. IGV went up to our level. Again, that secondary pivot we talked about there, right there on the weekly, and we closed just below that. A little bit of a kind of gravestone doji with volume. So again, cloud maybe getting a little extended, a little overzealous here. And if we do start to correct, you've got a big trend line there on the 20-week moving average. That would be a logical point. Dow transports here held up very well. So transports getting a bid. That's not a negative. Closing the week above this pivot high. That's a huge positive for the transports. But now you have resistance at 16.5. So this is where you surged up last year, and then we broke down, and then you all have all this kind of chop right in this area. It's real messy up there. So 16.5, 16.6. Let's just draw another trend line in there. And we'll put that right here. We'll do it like right about there, 16.6. Okay, so that's going to be a big area right there for the transports, and we are a little stretched here short term. I mean, we just went from 14 to 16.2 in the last 5-6 weeks. So a little bit again overzealous there, but nice strong close there on the week regardless. All right, let's get over back to interest rates again. We talked about the curves a little bit here, but 2-year still holding up. Reclaim the 20 moving average on the daily. Weekly, I don't see any issues here. It looks fine. 5-year reclaimed 4.09, so back about 4%. 10-year 3.4, again back testing that little trend line, and the 30-year back to 390 there by the end of the week. If yields continue a little bit lower, if they start to back off, I think there's higher lows, higher floors in them. Right now they're hanging in there. Again, the Federal Reserve is set to raise by 25 basis points. That is priced into the cake. If the 2-year continues to bid up, it's going to be around 5.25. That's the next level to the point where the markets could get in trouble. Right now, if they get above 5.08, which is the effective funds rate, it's not going to matter because the Fed's going to raise in a few days. But if we start to push up and we get through 5.25, you could have some problems in the market. But for right now, I think the market is quote-unquote safe here. All right, housing here, XHB, a little bit of a pullback. Finally, DR Horton reporting earnings. That had a gap and crap on Thursday. XHB coming in a little bit. This can still go higher. No technical damage just yet. ITB came in off an all-time high and wiped out 5-6 days worth of gains in one shot. Maybe this gets down to 82.50 if we get follow through, but again, the trend is still up here and we'll respect it for right now. VNQ real estate REITs here holding up okay. Look at this downsloping trend line right there, and you're just kind of consolidating beneath that. If you get enough consolidation, especially weekly consolidation, this can get through that trend line. So REITs holding up a little bit better, and I think the chart is starting to tell us that maybe it's turning the corner here. But VNQ having a decent week here, and we'll continue to watch that moving forward. We already talked about financials, XLF. That got above this channel on a weekly close, so XLF holding up okay, stalled out at the 100-week moving average, and then you have that red bar high at 36.24, so that will be resistance moving forward. KRE and KBE also breaking through those daily and weekly trend lines, so those are strong right now. They may have some trouble down the line, but right now we're getting a little bit of short covering, so we'll give them the upside bias for now, and these patterns are not terrible. XBD broker dealers almost making it to a new all-time high. There's your new your previous all-time high at 519 and change, and then you have this previous rising wedge pattern, and let me go to a weekly here. So right there, see that little X there? That may be where it's targeting. That would give you a slight nominal new all-time high, but broker-dealer is holding up really, really well here. All right, so let's shift gears and get over to energy and commodities. Now, crude is very interesting. So crude has now confirmed above all three of these trend lines. So if I zoom in on an hourly, you can see right here, we closed above all three of them. Why are these important? Well, this one goes all the way back to 2021. This one is, going back to last year. And then this one right here is your red bar high from May 1st, from the week of May 1st. We closed above. Now, maybe you maybe call this one, it could be a few pennies off. I'm just kind of just drawing it in there. It could be a few, but either way, you did close statistically 76.83. You closed above that week high 76.69. That's not, you can't dispute that. So I will give crude, it may do some more backing and filling, but I'm going to give it the upside bias to 82.72. We talked about this in the podcast. Crude's up 10% off the lows here, year over year. It's going to be very interesting to see how those inflation numbers come in the next month, especially since crude has gone down the entire time. So that 3% floor may start to get a little sticky. We'll be watching for that moving forward. XLE having a decent week, up 4 out of 5 days. That still has to get above 85.08 on a weekly close. XOP having a decent week. We talked about 135, and that closed above there, so that can get to 140, and then maybe 145. OIH continuing to powerhouse. Still overbought here. It's overbought for a reason, though, because I think it's going up to 375. I want to see some more backing and filling there, and then this can go higher as well. Nat gas having a nice pop on Thursday, little inside day. Friday, you see this little channel we broke out of. I love what it's doing on the weekly. We talked about Warren Buffett entering the market. Also, Exxon news just came out the other day. They're looking to double their LNG portfolio in the next decade. So bullish news here coming out for nat gas. Inventories number came in better than expected, and I believe we added one rig. So no significant change there. But either way, this chart is looking primed for a move towards $3, possibly even next week. On to some commodities, other commodities here. So uranium first, CCJ. Again, nothing's really needed to be updated here. So your pivot high here, 32.49. We did close above that, though, on a weekly close. So this is holding up really well. If you could close above that on a monthly, that would be a huge sign of strength. You do have a lot of resistance here with this big red bar. Take a look at the volume, but you're consolidating here, and now you're pushing up. So CCJ looks good. URNM looks good as well. It did pull back by the end of the week, down 1 1/4 on Friday, but this pattern looks fine to me. You get back above these moving averages, this can push up into that 37.50, 38 handle. So I don't see any issues there. On to some ag. MOS continuing up. So we've been talking about this, for a couple weeks now. So that 618 should get a zigzag up. Careful here, though. You're coming into that 20-week moving average. I would say 40 is max upside here in the near term. So just be aware of that. NTR, I've been saying 65 to 67, 68 for the last couple of weeks. That's where essentially we went. So nice pop there. And IPI still has a lot of resistance here around 25, 27, but pattern looks okay. If it consolidates more, it can go through that. I also want to talk about wheat. Mentioned this in the podcast as well. I said I like wheat. I like wheat futures moving forward, and look what we got on Wednesday. Huge surge. I had an order, down here around 610, never filled. But I am looking to get in on this on a pullback here. We had news out of Russia. They're looking to shut down. Basically, they're calling, They're calling their container ships carriers of military cargo. So there's worries that, they might shut down some of those fields, et cetera, blow them up, whatever it is. Either way, wheat looks really good. Take a look at this long-term level. That's as good as you're going to get. Big pop with volume on the monthly and the weekly. I like that. So I think wheat is going to go a lot higher, but 800 is your real big level here in the near kind of not too distant future. If you're looking for a way to play this, you can't play the futures. WEAT is a great ETF that tracks it very well. Just be aware it has contango decay, so do not hold this for the long term. Okay, let's get over here to the dollar index, as always, and the dollar actually bouncing okay. So it got above this daily red bar high, yesterday's close. So a little bit of a reversal there, sign of strength. Near term, you can go to that 20 moving average and the 102 area, but that's all we have penciled in right now. If you get a weekly close above 102.56, you've got a bear trap on the dollar, and then it goes a lot higher. But right now, gonna give it the downside bias until it proves it to me otherwise. So dollar on the weaker side, but getting a bounce here like I thought it would, and we'll just kind of react for just wait for a reaction there and see how that shakes out. But gold here got a pop in the middle of the week and then pulled back. Did close the week below the 20-week moving average, but it's holding up okay. If you get a close above 1971.80 on a weekly close, then this can go higher. But that right now is resistance. Silver had that big surge last week and then just kind of paused this week. Talked about 25.50 being resistance. It pulled back there. We'll see how it reacts when it gets into those moving averages. And then platinum here, retesting 1,000, finding a little bit of support at 960. I'm not doing anything with that one yet. I still think that one can have one more leg down. And palladium, I'd love for that to have one more leg down as well. Anywhere below 1,100, I think, is a really good area on PA. And then copper here backing off. So we closed below that big power bar from the 13th on Monday, and we just kind of consolidated here. So I think this is setting up another leg down to 370. If you take out 370, it's down to 340 on copper. Lastly, Bitcoin, guess what? No changes as you'd expect. Nice tight pattern here, especially on the weekly. Looks really good. The only issue I would even have with it is that it's almost too clean of a pattern that I think too many people are going to jump on it, and you could get a fake out. That's really the only thing I can find wrong with it, because that's a perfect bull flag on the weekly. But if you do get below 28.5, 28.6 on the daily, we have to start considering it could fail. But really on the weekly, it's not failed until you close below this green bar, which is at 26,331.93. So pattern looks fine for another advance, and I wouldn't bet against it right now. Okay, so lastly, just to wrap up here, again, back to the spiders. Watch those trend lines. Actually, let's use the SPX. I got those lines ready to go right there. 1, 2, 3. Those are your big levels. 4,600 is still resistance. On the upside for the triple Qs, 390. There's your trend lines right there. Again, rebalancing in the NASDAQ will happen on Monday, so they have a just slighter weighting. Will those Magnificent 7 stocks, and then, of course, more earnings and FOMC on deck later next week. Anyways, guys, going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. We'll talk to you guys all next week.